Well, let's get into stock of the day, and a favourite here on the call. Thought we'd take a look at retailer JB Hi-Fi. Cutting its interim dividend this morning, saying it's not appropriate to provide earnings guidance either, as the pandemic continues to impact the sector. Half year net profit and revenue also take a hit, but investors don't seem that phased. Share price up was 7% at one stage, now up 4.5%. So what did the guys think of it? Mathan, JB Hi-Fi, the update?
Oh, look, I think it's a great business, right? There's no doubt about it. If you're going to pick a retailer in Australia, they're probably one of the better ones, if not one of the top three. They execute well. They shove you more crap in per square meter than anyone else. Never take your kid
Anyone
there.
else in the world?
Yeah.
Basically, sales per square metre.
It might be. I think Chemist Warehouse probably.
Probably. I think Shaver Shop is up there as well.
Is it as well?
Yeah.
Okay.
I think more. They're now more online, but
you're right, that might be old.
Chemist Warehouse, I feel like I'm just basically things are going to fall on me. It's that kind of thing. But JB Hi-Fi, look, it's a great business model. I wasn't a big fan of them buying into Good Guys. But look, the cycle has worked. I don't know if that'll play out in the long term, but look, they execute really well. So there's no doubts about that. You can look at the shorts. Shorts have come back and it's starting to bottom out, and the shorts are starting to pick up. That just tells you where the market sentiment is. I think discretionary retail is a tough place at the moment, right? For me, the staples are much better play. So you've got your supermarkets, they can pass on the margin much easier. I think the supply side issues, wages, all of that plays into it, and people are choosing where to spend, and I think that's where discretionary struggles. I think it makes sense for them to play a bit more defensive on their guidance and so forth. So it doesn't shock me. I mean, if you looked at the chart over the last 12 months, it's pretty much going sideways. So you kind of know where it is. I don't think anybody's going to be shocked by it. The question is, yes, backward-looking data, property prices, massive spending, everything worked out for them. Going forward, I don't think it'll stack up. So this is where the trick is. This is a cyclical stock. You buy it when things are going badly, you sell it when things are going good. The last couple of years is as good as you're going to get in spending. So I'm not a buyer here, but I think it's a great stock. It's one, pardon the pun, you want to have on your shopping list. And when things go bad, when unemployment is going up, everyone's going, end of the world, you buy this guy.
Right, okay. Good.
Yeah, retail is a hard space at the moment. It is hard, isn't it? And it's hard because you've had this huge injection of income and people have pulled forward a lot of purchases. But at the same time, we've got really high quality retailers on the ASX, none better than JB Hi-Fi. And the valuations aren't demanding either. So there's all these attractive, unattractive forces colliding together. And with all that noise, you have to make a decision. Now, I would actually be selling JB Hi-Fi up here. No comment on the quality of the business. It's wonderful, of course. But I do worry that consumers have over-purchased. They've pulled forward demand. What they're doing with the dividend, I think, sends a signal about where they see profits going in the future. And I think the market, the multiple is quite low. So I think the market is expecting a pullback in sales to some extent. But I think sometimes with these retailers, the cycle surprises you on the way up and it shocks you on the way down. And I think we might see that happening here. There are other retailers, I think, that are still, I've got my eye on with a little bit more keenness than JB Hi-Fi. I own Lovisa at the moment, and I maintain that that's probably the best quality retailer in Australia. There's a couple of others I think look kind of interesting, but as a whole, I think this is an area of the market you want to exercise some caution on and not just see low PEs and rush into them, because I think that's probably a warning sign at the moment.
And particularly for JB Hi-Fi, because it's been lauded for a long time, has it? So a lot of people would be thinking, well, if there's a bit of a pullback or whatever, let's get into this as one of these stocks that is a fundamental part of your portfolio. But it's cyclical.
When cyclicals look cheap,
that's true.
That's a bad sign. Because it's always a better sign when it looks expensive. That means expectations are very low. Right? When these things look cheap, whether it's mining stocks, whether it's retail, any kind of cyclical looks cheap, check yourself, because you're thinking it the wrong way. So it's got to look expensive. That means people don't like it. If it looks cheap, that means everyone knows it's good. You're not buying a new stock.
I think it's the kind of thing where you want to use your strategically use your portfolio allocation. it's such a high quality business, and it's so rare to find managers with this much talent that you don't really want to. I wouldn't be selling everything and hold a zero position, but now is probably the time to scale down your holding,
Right.
and there'll be an opportunity to scale back up at a later stage.
Okay.